Hey everyone, welcome back to Corporate Decoder. In this video, we will be diving into the latest financial report from Limitless Projects Inc. And let's just say their journey has been anything but ordinary. It's like a startup trying to build a rocket ship with, well, let's just see what the blueprints look like, shall we? Before we start, if you appreciate getting straight, no nonsense insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below if you want to chat about these filings more. Alright, so Limitless Projects Inc. is essentially a tech startup that's been around since late 2020. They're trying their hand at software development, specifically employee monitoring software called Privacy and Value. They were also dabbling in a ride-hailing and food delivery app called Warp Speed Taxi. This here is their annual report covering their operations up to July 31, 2024. Now keep in mind, this company is what's called an emerging growth company, meaning they're smaller and have fewer regulations to deal with, which can be both good and bad. Let's get into what they actually do. They work with independent developers to create software concepts outlined by their president, Daniel Okolo. Their main project is this privacy and value software designed to keep an eye on employee productivity while still respecting privacy. Sounds like a tightrope walk, right? Now, about that Warp Speed Taxi app, it seems they had a settlement with a company called GCSS, giving up their ownership of the app in exchange for settling a debt. Then they sold their remaining shares in Warp Speed Taxi Inc. for a modest $11,500. So that venture is officially in the rearview mirror. Back to privacy and value. The idea is to monitor what employees are doing on their computers during work hours, tracking keystrokes, screen activity, and break times. They even partnered up with another company, Cyber Apps World Inc., to develop and market this software. However, Cyber Apps didn't make a crucial payment, causing that agreement to fall apart. As an emerging growth company, they can actually skip out on some of the more extensive reporting rules, like having their internal controls audited. This can be a double-edged sword. It saves them money, but it also means less independent oversight, which can be a red flag for investors. The software world is super crowded with big companies and small ones all vying for attention. Limitless Projects Inc. is up against giants with way more money and resources. Their success really hinges on finding good developers and coming up with software ideas that people actually want to buy. They also have to navigate a jungle of regulations, especially around data privacy like Europe's GDPR and California's CCPA. These laws mean their software has to be designed carefully to help their customers stay compliant, which adds another layer of complexity. And then there's the surveillance aspect of their privacy and value software. While laws like the US Electronic Communications Privacy Act allow businesses to monitor employee communications for legitimate reasons, it gets tricky when employees work from home or use personal devices. Any misstep here can lead to legal trouble, which could hurt their business even if they aren't directly responsible for the violations. A big concern is their intellectual property. They haven't filed for trademark protection for privacy and value or any other protections for their software. This means someone could technically copy their work, or worse, they might accidentally be using someone else's protected ideas, leading to costly lawsuits. Right now, they have no employees. They rely entirely on independent contractors to get their software developed. This can be a flexible model, but it also means they don't have a core team with deep company knowledge tied to their payroll. Interestingly, they haven't spent any money on research and development since they started. This really highlights their contractor-based model, but it also raises questions about how much innovation is truly happening internally. They own a 50% stake in a company called Privacy and Value Inc., which holds all the assets for their employee monitoring software. They don't own any patents or trademarks. This circles back to the intellectual property point, suggesting a potential for future issues if they gain serious traction. And no, they don't own any physical property. They're purely an intellectual property and software development company, at least for now. So their stock isn't traded on any major exchange yet. They've applied to trade on OTC markets, but there's no guarantee it will happen. As of September 11, 2025, there were about 37 shareholders. They've also never paid any dividends and have no plans to do so anytime soon. Now let's get to the juicy part, the financials. For the year ending July 31, 2024, they had zero revenue from customer subscriptions for their privacy and value software, zero, and they ended this period with a consolidated net loss of $161,524, which was entirely made up of general and administrative costs. Their auditors have basically said there's a substantial doubt that this company can keep operating. This is a serious warning that they're running out of cash and need money fast to stay alive. As of July 31, 2024, their total assets were around $396,890. This included just $39 in actual cash. The rest was tied up in prepayments and deposits, and software and office equipment. But their liabilities were much higher at $578,330, mostly from accounts payable. So they have more debt than cash. In plain English, they spent a lot more money than they brought in from their actual business operations. For the year, they used $53,993 in cash from operations. This makes sense since they had no revenue coming in from customers. How did they keep the lights on? By selling their stock. For the year ending July 31, 2024, they brought in $105,000 from selling shares, which is how they funded their operations. They also spent $51,000 on investing activities, which was for purchasing fixed assets and software related to developing their products. This statement about their auditor's opinion is really the core of their financial health. It's a formal way of saying the company might not survive the next year without more funding. Let's look at the balance sheet as of July 31, 2024. Their cash was a mere $39. Compare that to $32 the year before. Not exactly a surge in liquidity. Their total liabilities were $578,363. Aderyd acid $1 and $400 age avle in $1,403. This is a common sign for early stage companies that are burning through cash, but it's still a critical point to note. Here we see their profits and losses. For the year ending July 31, 2024, they had zero revenue and zero cost of goods sold, resulting in a gross profit of zero. Their expenses were all general and administrative, totaling $424. This led to an operating loss of $131,500, revenue $1,100 is attributed to minority and $524. After accounting for losses attributed to minority interest, their net loss attributed to minority interest, their net loss attributable to Limitless was $130.40, $61 and $520.40. For the year, this is a pretty significant loss for a company with no revenue. This table shows how the owner's stake in the company has changed. You can see their accumulated deficit grows each year because of the net losses. For example, the accumulated deficit at July 31, 2024 was $905,694 and $174, up from $74,540 watching for $40 the previous year. This deficit means the company has lost more money than it has earned since it started. This statement breaks down where the cash came from and went. For the year ending July 31, 2024, they used $53,993 for operations, got $105,000 from investing activities, and used $51,000 for investing. The net change in cash was a tiny increase of $7, bringing their total cash to $39. You can see they are definitely reliant on external funding to stay operational. In note 1, the company acknowledges its incorporation date and business activities. They also mentioned selling an application for $10,000 plus a promissory note, and that the previous agreement with CyberApps for their privacy and value software was terminated. Note 2 is where they reiterate the auditor's concern about their ability to continue as a going concern. They've lost significant money and need to raise capital. It's pretty clear their survival depends on getting more investors or generating revenues very soon. Here they outline their accounting methods. They use generally accepted accounting principles in the US. For cash, they only have $39. They explain how they measure fair value and recognize revenue though. As we've seen, revenue recognition hasn't been much of a factor for them yet. For earnings per share, the number is essentially zero, or a very small fraction of a cent, because their losses are so spread out over so many shares. Essentially, each share represents a tiny piece of a company that's losing money. This section is crucial. Their management admits that their internal controls over financial reporting are not effective. They've identified material weaknesses, specifically the lack of an independent audit committee and a qualified audit committee financial expert. This is a pretty big deal, as it means there's a real risk that financial errors could go unnoticed or uncorrected. The specific weaknesses are the absence of an independent audit committee and the lack of a director who's an expert in finance. For a public company or one aiming to be, this is a significant governance gap. It looks like Daniel Okolo is pretty much the entire management team, serving as president, CEO, CFO, and director. His background is in hospitality and tourism management, which is quite different from software development. He's also the sole director and officer. Directors are appointed for one-year terms. They state that during the fiscal year ended July 31, 2023, all filing requirements for officers and directors were met. And here's an interesting tidbit: they haven't adopted a code of ethics for their officers. They also don't have a formal audit committee or a financial expert on the board, stating that the cost is prohibitive and that the services aren't warranted. Given their limited operations, this lack of independent oversight is a recurring theme. Let's look at executive compensation. For the year ending July 31, 2024, Daniel Okolo received 0 salary, 0 bonus, 0 stock awards, 0 option awards, and 0 in any other compensation category. The same goes for 2023. This is not uncommon for very early stage companies where founders are reinvesting all available funds back into the business, but it does highlight the lean operational setup. As of September 11, 2025, Daniel Okolo seems to own virtually all the company's shares, about 100,000 out of 100,000 out of 100 issued shares, which is about 99.40%. This means he's the overwhelmingly dominant shareholder. Back in January 2021, they sold a large chunk of shares to Daniel Okolo at a very low price. Just $0.0000 all Fishen Firozi dollar all and Fen $1,000. This is a typical early stage transaction where the founder funds the initial setup. For audit fees for fiscal year 2024, they paid $2,500. They also had $750 in all other fees the accountant provided. The board, which is acting as the audit committee, approves these services. It's a small amount which reflects the company's small scale, but the lack of a formal audit committee is still a governance point. This just lists all the documents that are part of the filing, like their articles of incorporation and a bill of sale. It also includes the crucial XBRL financial data, which is what we use to analyze their numbers. Now let's talk about what this all means. Limitless Projects Inc. is a company in its very earliest stages. Their core idea of employee monitoring software is interesting, but they haven't generated any revenue from it. They've also divested their other venture into ride sharing. The financial picture is frankly dire. With only $39 in cash and over $500,000 in liabilities, their survival is highly uncertain, as confirmed by their auditor's going concern warning. The biggest red flag here isn't just the lack of revenue or the negative equity, but the governance issues. The absence of an independent audit committee and a financial expert director suggests a company that might struggle with financial oversight and transparency. While it's common for startups to have lean structures, these are fundamental controls that are crucial for investor confidence. Their strategy seems to be all about future funding and development, with no current income streams. Relying on independent contractors and having no employees means they lack internal stability and expertise. The intellectual property situation also presents a significant risk. In my opinion, Limitless Projects Inc. is a very high-risk investment, if it's even an investment opportunity at this stage. They have a concept, but they're facing immense financial hurdles and significant governance weaknesses. The path to profitability and even continued operation looks incredibly challenging. They'll need substantial new funding and a dramatic improvement in their operational and financial controls to even begin to think about success. Alright, that's our breakdown of Limitless Projects Inc.'s latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.